Thanks for tuning in to our live weekly Facebook training where we discuss business credit building tips, tactics to get business loans and credit lines, and actionable business growth strategies. We're going live on Facebook starting in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Going live now with your host, Ty Crandall.
What's up, Facebook? Ty Crandall with Credit Suite here today. We are going to be talking about bank statements. We're actually going to be talking about lenders and what these guys are actually looking for when they ask for your bank statements. Look, more and more loan programs are relying some which way or form on a review of your bank statements than ever before. It didn't used to be like this. It used to be that lenders oftentimes looked at tax returns to determine the financial stability of your business. But this has changed a lot. Now we're seeing less and less reliance on tax returns and more reliance than ever before on bank statements. So here's the question. Why are lenders asking for your bank accounts? And what are they looking for? Why are they really tearing apart these bank statements? And what items are they looking for to determine if you should be given a loan, how much you should be given, and the rates and terms that you should get? That's what we're going to talk about today. I'm going to get you inside the lender's head on what they're looking at when they review your banks. So then that way, you know how to manage your bank account in a way that makes you more lendable. Is this important? It's extremely important because we're now in a world where, 80% plus of these loans are now requiring bank statements. So how you manage your bank account per what they want to see makes a difference of whether you get approved, you get denied, the rates and terms you pay, and how much that you'll get approved for. So today, we're diving in and we're talking about bank account management. Most importantly, we're talking about how to get inside the lender's head and what they're looking for when it comes to bank accounts so you can make sure that you have your account set up the right way so you can come in and get approved. So Gilder Sleeve, you gave me a wave. So hello, thanks, welcome. Thanks for coming in. Okay, so bank account management and opening, using, closing accounts. So lenders want to make money, various appetites for risk, right? So what I'm basically saying is that, look, depending on the type of lender and type of risk that you have, some banks will look at some of these things differently. But this is an overview of how they're looking at it, and what you're going to uncover here is that how you manage your bank account really directly relates in the kind of rates and terms and approval amounts that you may actually receive when you go to apply. So first thing we want to see is that lenders want consistency, okay? So basically, you want to make sure that your business bank account shows the exact same information as all of your business records. By this, I mean that what you need to do is you need to make sure that your name, your address, all the information that shows on your bank statements is 100% in line with what else they find other places online. So I'm trying to mess with the flash here, mess with all kinds of things. So basically, the name, the address that you have on Yelp, on Bing, on your website needs to be the same as what's on your bank statements. Believe it or not, this is one of the common little minute details that lenders look at just because they know that big, legitimate, credible businesses have their act together and all their stuff is consistent. So they're trying to catch you up and trip you up to make sure you're consistent. So you don't want to put a different name on your bank statement than what is on your actual website. Seems like common sense, but it's not. Credit Suite is a different name than Credit Suite Incorporated. It's different. As a matter of fact, I just actually had the same thing from Bing. Bing said, hey, we have a discrepancy here. Your website says your name is Credit Suite. We have your name as Credit Suite Inc. Which is it? So it makes a big difference. So your bank statement needs to read the exact same address, the exact same name as what's listed everywhere else. This congruency becomes very important. Alquina, welcome. Thanks for coming in. I appreciate you joining us. Exact physical address, okay? You need to have your exact physical address. You don't want to use a P.O. box address on your bank account. You also want to make sure if it asks for a phone number that the phone number is the same as what's everywhere else online. Don't make your bank hunt for the information, okay? This is one of the craziest bank loans. One of the biggest reasons that bank loans get denied is the information you're giving the lender isn't exactly the same as what they find online, and they say, we're not going to waste our time trying to verify that this company applying is the same one we're finding online. Denied. And what's crazy is that people are walking into banks with huge stacks of paperwork and getting denied because their name, their address, the basic stuff that we're talking about here doesn't add up. It doesn't match up. They will not go on your side when it comes to assumption, right? They're not going to come and say, well, we think it could be the same business, but it might not be. Let's just go ahead and assume it is. They'll say, we think it may be the same business. It might not be, so we cannot approve this loan. And in a lot of cases, they will not even tell you why to deny. So you need to make sure, again, that they're not hunting for this information, that the information you're giving them on the application is the same as what's on the actual bank account itself. Joe says, I set my business up with UPS store address 7 years ago. Should I change it to a virtual address now? Well, here's my advice. You're pretty set on that address. You've had it for 7 years. See what happens. But I'll tell you, if you start to get approved, especially for business credit accounts, more than likely the fact that you're using a P.O. box or a UPS address is probably the reason for the denial. Test it out. Test the water. See what happens. Try applying for some accounts and see before you change. But yeah, my overall advice is that a physical business address is best, virtual address is second best, home address is third, and UPS and P.O. box is last. It doesn't mean you're not going to get it denied for every place because you're using that, but a lot of places will deny you if they find out you're using UPS and P.O. box, and they do because those addresses are put in a database that they use to check against before they approve you. So back to the topic at hand. No lenders will consider all ways that a business may be listed. This is why you've got to have this congruency, okay? So if they can't find what they need easily, then they're going to deny it. The bottom line is that if you have any information on your bank statements that shows them that it's different than what's on the application, chances are you can get denied. This is why the majority of business loans get denied. It's a super simple thing, easy to control, easy to prevent. Just make sure that all of your information is consistent. Okay, lenders prefer bank references. So what is a bank reference? This is simply somebody at a bank that you know that just by using them as a bank reference, it basically reflects that you have a bank account set up with that bank. So what they ask for in a lot of cases, and this is how no problem, Joe. This is how this works, is that they're not going to ask you to prove your bank statements. In some cases, they'll ask you for a bank reference. A bank reference is just to verify you actually have a bank account set up. So what they want is your contact at the bank just to verify you actually have a real physical bank account set up. They want to see consistent deposits. They want to see more deposits than withdrawals, okay? So first of all, this is kind of what we're referring to as positive cash flow. More money going in than coming out. Okay, that's a big thing. But they also want to make sure you have consistent deposits, not just scattered deposits. So Richard, welcome. Thanks for coming in. And Matthew says, I received a Cap 1 Spark for my business, but I'm the guarantor on there. Will this still help me build a business credit while I do the Net 30 process? Yes, but you need to be alert. Capital One reports on your business and your consumer credit reports. So if you carry high balances on those, it will damage your consumer credit scores. So yeah, it will help you build business credit because it reports there, but it also hurts your consumer credit as you use it because it reports there as well. So just be cautious about that. That's something that you want to be very alert of. Don't carry high balances at the end of each statement period because that can really, really, really hurt you. So consistent deposits is one of the things that they're looking for when they evaluate your bank account. Here's what I'm talking about. They don't like real estate agents. They don't want somebody that has 2 or 3 deposits in a month that are big deposits because their fear is that what happens next month if you don't have those 3 transactions? What if you only have 1? What if you have 2? So you have to keep in mind this. If you really want to get in the lender's head, it comes down to one very simple thing. Their worry is that you will not pay them back. Everything they're doing is trying to determine whether you will or you will not pay them back. So when they look at consistent deposits, what they want to see is that you have money regularly coming in the bank account. Preferably, it's a retail store. It's somebody that has money every day coming through the merchant account and getting deposited. That's what they want to see. Because if you have money coming in through hundreds of deposits, let's say, or through deposits through hundreds of transactions, even if some of those transactions stop, you're still able to have enough come in for them to collect enough money to get paid. So the bottom line is they want consistent deposits. They want a volume of deposits. They just don't want a few scattered deposits for that reason. If your business is new, how likely am I to get credit? The time you've been in business will not affect your ability to get business credit. What will affect your ability to get business credit is setting up your business credibly. Then the number of trade lines you have or accounts you have reporting will restrict you from getting other trade lines. So something to keep in mind. Matthew says, thank you with the card. I only keep it under 3% utilization. That's perfect. 2 or 3% is really where you want to keep. Okay, so consistent deposits, bank references. We talked about it, but positive cash flow. Again, more money going in the bank account every month than coming out. Okay, this is a huge one they look at. Huge. Do you have more coming in deposits than you have coming out in withdrawals? What is your average daily account balance? And what is your ending account balance every single month, okay? Now, if you wanted to go get a bank loan like an SBA loan, they're going to want to see you have $10,000 a month in the last 3 months on average in the bank account. A lot of revenue lenders want to see this amount too. But what they're typically looking for is average daily balance, and then they're also going to look at ending. Remember, and Melvin says, as it pertains to banks and references, you're saying if your business is new, how likely am I to get credit? Oh, bank loans, bank reference, you can easily get the minute you set up the bank account. You're probably not going to get a loan from a bank until you're very well established. So I would be working on some other types of financing, including business credit first. We have a ton of stuff on our YouTube channel on that, youtube.com/credit suite. All other kind of ways to get money. We even did a webinar last night on 12 different kind of credit lines. Go that way, Melvin, versus actually go to your bank to get a loan. But a bank reference is easy to get. Set up the bank account the minute you set up the EIN, and that will then get you the actual bank reference. So remember, the bank's biggest concern is, will you pay them back? So they're looking at your average daily balance. So guys, thank you for the likes. Thank you for the shares. We don't have a bunch of people in here. So the more likes and shares and that kind of stuff you get, the more Facebook shows it to more people, and we get more engagement and all kinds of cool things happen. So what it comes down to is, will you pay them back? Well, how can they tell that? Well, if they see what your ending balance is, and when they see what your daily balances are, that's a pretty good indication whether you have the money to pay them back or not. If your monthly payment to the bank is going to be $2,000, and they see that at the end of every month you only have $500 in the bank account, well, that's probably a pretty good indicator that you're not going to be able to pay them back. So remember, the primary thing that lenders are thinking is, do you have what's needed to be able to pay them back? If your ending negative balance at the end of every month is negative, well, that's a clear no. If your average bank account balance is negative or very low, well, that's a clear no. You probably can't pay them back. That's why how much you keep in there on average every day and how much is in there at the end of every statement period, especially at the end of every statement period, is very important. Revenue lenders, when it comes to revenue lending merchant cash advances, they're really looking at the amount of money you have in the bank account at the end of every month. So making sure that you control those things is very, very, very important. Account age, how long you've had the actual account for, okay? Seasoned accounts have more stability. They have more longevity, okay? Non-sufficient funds, are you overdrawing the account? And if so, how many times, how many negatives do you have? Again, this makes perfect sense. About it, if they care about getting paid back and you have a bunch of non-sufficient funds showing that you're constantly overdrawing the account, then from a bank's perspective, they go, wait a minute. You don't even have enough money in your bank account now to manage your current expenses, and you're supposed to take on a loan and pay us back? I don't think so. So again, overdrawing the account, having more money go out than coming in, these type of things are exactly what give a lender an indicator that you're probably not going to pay them back. That's why they're looking for these things. So D says, if I have a lot of customer credit, will it affect my business credit? No, it won't. The only thing that affects your business credit is what reports on your business credit reports. And hopefully that helps you. Hopefully that answers that question. Kevin, welcome, man. Thanks for coming. I'm always excited to see you, buddy. Okay, so next, business using other bank products, okay? The more bank products that you use, the higher your bank rating is. Now, your bank rating is your internal credit score the banking system has. This only really matters if you're going to get an SBA loan. But what I say is I try to prep you for the end. You want to end up with an SBA loan. So if you want to know how to get to the end, the top goal, then the end of the top goal is this. You need to make sure you get multiple bank products. What do I mean by that? We have 2 bank accounts and a money market account. That's what I mean by that. We have 3 accounts with the bank. So because we have multiple accounts with the bank, it makes us look better. It gets us scored higher when it comes to our bank rate. It makes us more lendable, okay? Savings account, investment accounts, that's what we talk about. Do you have these other kind of accounts, okay? Keep the balances as high as you can, especially within a 90-day time period of you applying, okay? You also want to come in, open loans, CDs, other of these type of things as well, okay? Because when you do this, this helps your bank rating. So that's what they're primarily looking. They want to see with the bank rating that you have multiple accounts, that you're doing a lot of different types of things with the actual bank. Some other things that they're looking at that I don't have here is one, they're looking to make sure that you don't have ups and downs in your revenue. What they really want to see is this, just consistent revenue that goes up. And hopefully that looks right on your screen and it's not going down. Okay, consistent revenue that's going up month after month after month. Maybe last month you took a dip, but then this month you're even higher than you were the month before. They want to see steady revenue increasing. When they see all of a sudden you had a month where your revenue just dropped and all the deposits just dropped off a cliff, or multiple months like that, or when they see that your revenue is declining, this creates all kinds of problems. So making sure that your revenue is increasing month to month, your deposits are increasing month to month, that's another big factor that they're looking at. Bottom line, are you growing? That's what they want to know. Kevin, love you too, bro. Matthew, does all still apply for independent used car dealers? It doesn't matter. All this applies for any kind of loan where they're going to look at your bank statement. Here's why they're asking for the bank statements. Look, guys, you can't be naive to think that lenders are just asking for documentation to ask for documentation. Every piece of documentation you're asked for when applying for a loan or a credit card is heavily scrutinized. The question is what are they looking at? That's exactly what we're talking about today. We're talking about exactly what they're looking at when they ask for the bank statements, so you can make sure that these are in line or know whether you should or maybe even shouldn't even bother applying. Oda, hello, welcome, thanks for coming in. So let's talk a little bit more about bank ratings. Bank ratings is the internal score the banking system has. Now, this is only ever going to matter to you when you go to get a loan from your actual bank. It's based on your average minimum balance over 3 months. The highest you're going to get bank rating is called a high 5 rating when you have 70,000 average in your bank account over the last 3 months. Lowest bank rating you're going to get is $1,000 to $4,000. You're going to need $10,000 in your bank account on average over the last 90 months to have a bank rating high enough to actually be able to come in and get a bank loan. What's very important with what I just taught you. None of this matters with alternative lenders. None of this matters with business credit. It only matters if you walk into your bank to get a loan. But again, my goal is to teach you what you need to do long-term as well, so you'll know how to set up your business for long-term success. Now, beyond bank ratings, some lenders have niches. So it's, again, if you find a bank that does really well working with business owners, for example, well, then that's something you probably want to do. See if you find lenders that work with your niche. Okay, seasoned accounts mean borrowers know the business. Okay, so again, how long you've had your bank account open matters a lot. So this is why my advice to you is that when you first set up a business and you get your EIN, get your bank account next. Like, do it the same time. Because even if you have to keep putting a little bit of money in there every single month, having longevity on your bank account goes a long way. Now, BPL Princess, can you ask a creditor to report? I have a WEX fleet card and I notice they are not reporting. Here's what you need to know. You can ask them, but there's a reason that these companies don't report. D&B, for example, requires like 2,000 accounts be reported a month before they let companies report. A lot of times, like Experian won't let us report because we deal with business credit building. So I see people in SEO and website companies that get denied. So maybe they tried and weren't able to get approved. Or maybe they choose not to for another reason. But if they need any help and you need any help, let us know. We have helped a lot of companies get set up to actually report, and we don't charge to do that. Our goal is to help you build business credit. The more companies we can get that report, the better. So if we can ever help with that, let us know. We get them a whole like a PDF document on what they need to know and all the instructions to be able to get set up. So hopefully that helps. If you're asking, you run into resistance, if we can help you there, let me know. Okay, so for loan application, they're going to want you to supply profit return, P&Ls, tax returns, only if you're applying at the bank, okay? So again, these are the type of things that you're going to want to establish that relationship before you actually apply, okay? These are the type of things where this relationship so that you're going to pay back. Look, you should have a relationship with your banker. I do. Okay, when I walk in my bank, I know my banker, Robin. She knows me. I know everybody in that bank. It makes it so much easier to get the things done that I need to get done. Okay, when I need accounts set up, she doesn't require we all come in and sign. She sends us paperwork to sign. It's so much easier to be able to get what you need from your bank when you actually have a relationship set up with your bank. So a quick overview here. So what we're talking about is what lenders are looking for is a lot of things, right? When they're looking at your bank accounts. Consistency. They want to make sure that all the information you have on the bank statements is the same as your website, etc., your name, your address, etc. They're going to want to ask at some point for bank references. This is just somebody at the bank you know at the person that you have your bank account with. They want to see regular deposits, consistent deposits that are happening regularly, not a few large deposits. They're going to make sure you have positive cash flow, more money coming in than going out. They're going to want to see a trend that your revenue is climbing month to month, the deposits are climbing, that they're not declining, that you're not like this or in a seasonal business where it's low. They're going to want to look at your average daily account balance and your ending account balance to determine if you have the money to even be able to pay them back. They're going to look at how long you've had the bank account, how responsible you are. Are you overdrawing the bank account and getting overdrafts, or are you not? Okay. They're going to want to also see, are you using other bank products? Do you have other types of accounts? Now you got to be careful. When it comes to revenue lending, they're only going to look at one bank account to determine how much revenue you have. So you don't want to be running a bunch of money through multiple accounts just to have multiple accounts. Do what we do. Have a money market account to move profit into. If you don't have profit, then read a book called Profit First. It's a fantastic book. It teaches you to take out your profits first before you do anything else, and take that out and start putting it into a secondary account like a money market. Have your primary checking account. Have another checking account that you only keep a little bit of money to, and that's the one you carry your debit card for. So if you ever lose your debit card, they can get into the small account but not the higher balance account. That gives you 3 accounts. So again, that's not going to help you when you apply with on deck for a revenue lending loan, but it will help you when you go to your bank and try to apply for a bank loan like an SBA loan, okay? And the same thing is using other products that they have, as we just talked about, so as investment accounts, etc. Remember, if you ever want to go in to get an SBA loan, you need to have about a $10,000 minimum balance on average over 90 days. So if you don't have that, then before you go to get an SBA loan, 3 months before, get that money in your bank account so you have 10 grand or more. That's going to give you a bank rating that is acceptable for you to actually be able to come in and get approved. So again, those are, I'm not going to waste a bunch of your time because this isn't a topic that requires a tremendous amount of time. I just want to give you a brief overview of these are all the things that lenders are looking for when they're really looking at your bank account, starting from the top all the way down. Again, the other thing they're looking for is fraud. Stop trying to fake bank statements if you're one of those crazy people out there that sends us fake bank statements. They know it. There's so much stuff on a bank statement you'd have to change to make it add up. So they're looking for fraud. Does everything add up? Does one page equal what it should on the other? Does it look like a legitimate bank statement, for example? That's what they're looking for. It's just proper bank account management. You have more money coming in than going out. You manage your bank account responsibly. You don't have overdrafts. You don't have non-sufficient funds. You have a lot of deposits consistently happening instead of just a few larger deposits. You've had your bank account open for some time. You have somebody at your bank you can use as a bank reference. These are the basic things that they're looking for. And again, of course, they're looking at how much you have in deposits. How much you have in deposits will, in a lot of cases, also equate to how much money you actually get at a loan. Almost always with revenue lending. On deck and all these guys that deal with revenue lending, they want to see how much are your deposits every single month, and that's how they're going to determine how much of a loan to give you. It's going to be about 10 to 12% of whatever your annual deposits are. Now remember, with revenue lending like places like On Deck, they don't really care about credit. They don't care about collateral. All they care about is how you manage your bank account. That's all they care about. They care about how much your revenue is. 5,000, 10,000 or more in revenue, it opens up some options for you to be able to come in and get loans. And again, how much you have in deposits through that one account will determine how much of a loan you'll get when it comes to revenue lending products. So hopefully that helps you out. Okay, Oda, I need a job to do that, friend. Well, then you got to come in and you don't need a job. You need to start a business. Don't get a job, start a business. And if you want more information on starting a business, then make sure you check out our YouTube channel, youtube.com/Credit Suite. As a matter of fact, this week, Tuesday, we even did a webinar on that topic. So you want to get in touch with us, want to learn more? Well, if you're interested in getting a loan, feel free to go to creditsuite.com/get funding. Right there, we never charge you a dime to get financing. Lenders will have their own rates and terms they'll charge you. But this is a great quick link you can go to learn more about the money you can qualify for now. You can also give us a ring at 877-600-2487. And you can also go to creditsuite.com/Facebook. Okay, and that's my daughter's drawings right there, so don't mind those. creditsuite.com/Facebook. Free guide on building business credit. If you go to facebook.com/credit suite, you'll also be able to type in EIN in our messenger, and we'll notify you every week when we go live. So we will be back here. We try to go live every Wednesday at about 4 o'clock Eastern unless I'm out of town, which sometimes does happen. And we will be back. And in the weeks to come, we're going to be talking about things like business legitimacy. We're going to be talking about how you get funding through every stage of your business from startup all the way to expansion. We're going to be talking about the vendor credit code, cracked, about all the things you need to know about getting vendor credit. This will be in the weeks to come. So I will see you next Wednesday at 4 o'clock Eastern, where we'll be diving into more cool topics that will help you get credit and financing to fund your business. Thanks everybody for tuning in. I will see you next Wednesday at 4 o'clock Eastern live here on Facebook. Thanks everybody. Have a great day.
Please like and subscribe to get Credit Suite on Facebook for more live Facebook weekly training on getting money to grow your business and other business growth strategies. And don't forget to grab your free 4-step business credit building guide at creditsuite.com/Facebook.